Ladies and gentlemen, good evening. This is Christopher Aaron. It is the 26th of October, 2016, late in the evening here on the East Coast in the United States. And this video will be quite a bit shorter than the last one. We are not out in the woods today, unfortunately. We are primarily here in the studio, so it will be shorter. And I want to shift the focus today onto the gold mining sector. I do this every so often because there are a number of people who are very interested in this sector, and there are new people approaching this every day, and I think that's great. There's a ton to learn out there, but at the same time, we want to keep things as simple as possible. And I like to do that by primarily focusing on the charts. The charts, to me, are the most unemotional language that we can have when we are looking at what is inherently a very emotional subject, finance and money, but not only that, but the system of money that we have around us, which we all know is inherently flawed and is inherently designed to steal purchasing power or steal savings from you every single year. So these are emotional subjects, but at the same time, it's not good enough to just get emotional about them. We have to actually look at what is happening here in the markets. So today we're going to look at the gold mining sector, as I said, and we are focusing on this, the GDX fund. For those of you who are just approaching the sector for the first time, the GDX is a basket of approximately 50 gold and silver mining companies that are digging the gold and the silver out of the ground. That is their primary function. And this contains some good companies, some medium companies, and some not so good companies. It's an average of all those companies. And all we're doing here is looking at the share price of this fund, which looks at the average of all these companies. Now, this chart gets a little bit complex because there's been a lot going on in this sector over the last few months. But the important thing to understand about the gold miners is that they are highly leveraged to the prices of the metals themselves. So for example, if you go back and you watch some of the older videos, you'll see that from the December, January lows in gold to the most recent highs this last summer, gold had risen some 26%, basically from roughly 1045 up to 1375. It was about a 27% move. And just do the math on the valuation of the companies that are digging the metal out of the ground. This went from just around 12 on the GDX to over 31, which was over a 150% move in the exact same time period for the companies that are engaged in exploring and developing these mines. Now, this makes sense if you think about it rationally, if you think about what's happening to these companies, to their profits. I mean, just imagine that there's a company and they are only making $100 per ounce when the price of gold is $1,000. So in other words, it costs the company $900 per ounce to dig the metal out of the ground. They turn around and sell it at $1,000. Their profit is therefore $100 per ounce, the difference between the cost and the sales price. So imagine if the price of the metal only increases by $100, by 10%. In other words, the price of gold goes from $1,000 to $1,100. Suddenly, that company is no longer selling it for a $100 profit per ounce. It is now selling it for a $200 profit per ounce, doubling the profits, and therefore, most likely, the share price of the company, even as the price of the metal only rose by 10%. So a 10% change in the price of the metal can very easily translate into a doubling of your investment in the gold mining sector. That's how leveraged this stuff is. It is like really playing with fireworks here. It's quite phenomenal when you watch it on a day in and day out basis. Now, of course, it would be irresponsible for me to not mention that this happens on the downside too. So as we can see, as gold from the summer high around 1375, 1378, I believe was the peak, gold has come back down about $130, about 10%. And the value of the gold mining companies have lost 50% amidst a 10% drop in the value of the metal. So that is why I always recommend, if you're interested in this, you must do this with discretionary capital. This is capital that you have a high risk tolerance for. This is not appropriate for the next month's rent money or the current month's food money. This has to be capital that you can afford to be without, and furthermore, that you can withstand these swings for a number of months as this thing hopefully moves in the direction that we expect it is going to. So as we are here looking at the value of this fund again, we could see there was this strong impulsive rise out of the lows, over 150% in 6 months gain. And then we've had this decline here that is now being marked by the primary blue trend channel here. So the price of the GDX is getting close. It is thinking about breaking out of this primary downtrend here shown by the royal blue channel. And when that happens, this is going to be a key breakout. Now, this does not mean that the GDX will be shooting up to new highs again in the next month or two. What it does mean is that the strong primary downtrend that has been forming here since the August high is over. And after that, a number of things can happen, but as long as that breakout holds, what we can usually say with reasonable confidence is that the price will not fall below this low seen here. You could even see on a breakout like this, you could even see a retracement back into the lows like this, kind of hugging the upper boundary of this decline. You could see this sort of retracement here where my mouse is, followed by a period of consolidation. But in most instances, when an important medium-term trend channel such as this is broken, it does give you a strong indicator that the low has been put into place. Of course, no technical signal is perfect. If it was, I wouldn't be here. I would be on my yacht while someone watches my Maserati. But given that that has not happened yet, I am here to explain to you the significance of what will happen when this trend channel is broken to the upside. We will be looking at the first significant decline of what we believe to be a new primary bull market in the precious metals. This will be the first decline that is resolved and broken to the upside. Now, we have had a lot of confirming indicators here, a number of technical levels coming in here between this 21 and 22 level. We've been looking at the breakout from this trend channel. We've been looking at this gap being filled here from May. This is a level where no sellers had shown up back in May. Oftentimes these gaps like to get filled several weeks or several months later. We saw that almost exactly perfectly thus far. You have, as was mentioned earlier, the exact 50% Fibonacci retracement of the entire decline. So we had a number of technical levels here coming in between the 21 and the 22 level that were giving us a strong indication that there would be a high probability of the bottom forming here. If the bottom is forming here, this is certainly a good time to be considering a plan for what may happen with the next surge higher in this sector to come. I still do believe that this was a long-term generational bottom that was put in here from July through January of this year, and that what is to come has been hinted at by the rise that we have seen from the beginning of the year through August. I believe this was a hint. This was a first inning, to use the baseball analogy. This was the first period, to use the hockey analogy for our neighbors up north. Perhaps this was nothing even close to the first half, to use the football analogy for all of our friends in the rest of the world. Not even close. Something that happens like this for 6 months from a generational low valuation does not end after the first 6 months. This was hinting at something bigger developing here over the years to come. What's another way to look at the valuation of this sector? We have this is an index that I do not put up. Actually, I don't know that I've ever shown this one before, but this is very interesting to look at. This is basically giving us a hint of the technical sentiment in the gold and silver mining sector. So we are looking at what is called the Gold Miners Bullish Percent Index. And that's a bit of a mouthful. But essentially what this is telling us, it's the percentage of those major gold stocks that we were looking at in the last slide. It's the percentage of those that have a bullish posture to them. In other words, that a algorithmic survey shows that these companies are aligned in a bullish way, and therefore investors are looking at these bullishly. There is an algorithm that is used that's based on another series of charts. They're called point and figure charts. That's a discussion for another day. For right now, what we want to look at is the reading of the percentage of these companies that are in a bullish posture right now out of all the large cap gold and silver mining companies that exist. And right now, this level has come all the way back to where it was at the absolute lows. So mind you, the lows here were hit, and after that, we saw 150% rise in the sector. The bullishness in the sector has come all the way, basically within a few points here, all the way back down to where it was at the January lows. That's how bad the sentiment has gotten in this sector. Okay, so what will happen next time if this rebounds back up to the highs? As far as the sentiment goes, will we be looking at from here another 150% rise? Perhaps. Perhaps this very well could happen. Could we be looking at a strong surge and a period of consolidation for another 6 or 12 months before the next rise happens? That could be likely as well. But I think it's very important to look at these sentiment indicators. Let me flip that back one more time. Okay, we're looking at some of the lowest sentiment here since January, since these lows right here. Yet the prices are significantly higher still. So if you are a contrarian, if you've arrived here at the gold and silver channel and you're researching this and you're investing in this sector, you're obviously doing so because you are a contrarian. There's no one out there really in the mainstream. You can't turn on CNN. You can't turn on BBC. You can't turn on any of these major news channels and hear anything intelligent said about precious metals or currencies. I mean, it's just unheard of. So by definition, if you've arrived here, you must be a contrarian. You must be thinking outside of the mainstream perspective and saying, what's actually happening here? Well, if you understand that, then you must also understand this. The time to be looking at making your investments is when most people are not interested in them. which happens to be right now. So back to the GDX here, we have all these confirming indicators. We're waiting for the break of this downtrend. This, of course, is not a recommendation to put all of your capital into this sector. I think we live at a very interesting time right now where we have these incredible cross currents of rapid advances in technology and medicine and human capacity. Yet at the same time, we have unprecedented levels of corruption and siphoning away of people's livelihoods through inflation and taxation. So there's these real cross currents. And what I like to say is we should not place all of our eggs in one basket, no matter how sure we are that the Fed is going to keep printing money and debasing the currency. We should always leave some room for, what if something else happens that I or you are not aware of? That said, we are waiting for the break of the downtrend here. This looks like a very good time to be considering this if you are new to the sector or if you're looking at making some purchases in the gold and silver mining sector for the first time. Certainly nice to be doing it when most people are very bearish. The premium research does come out weekly for subscribers. It includes not only analysis like this on the GDX, but also gold and silver, currencies every single week. So I can't possibly do that all in videos every single week. That goes out into the premium research. Everything impacting the precious metals that crosses my desk here and my mind, it just goes out. I also do individual consultations for anyone who is looking for an independent perspective on their unique situation. Thank you very much for watching. We'll get back to the metals next week. Have a lovely evening, and I will see you this time on Wednesday.